Cipher Mining had another powerful session on Monday, climbing by $1.15 or just over 6% to close at $14.65 per share, before adding a further 12 cents in the aftermarket. The move represents a continuation of the strong upward trend that has defined the stock's recent performance, and it once again signals that investor sentiment towards CIFR remains bullish, even in the absence of a major new headline. This latest jump builds on growing optimism around Cipher Mining's transformation story, from a traditional Bitcoin miner into a diversified AI and high-performance computing infrastructure company. The pivot has been unfolding for several months now, but Monday's trade action reinforced that this narrative continues to attract both institutional attention and speculative interest. So what exactly was behind Monday's rally, and why is CIFR showing so much resilience at this stage of its run? Let's start with the fundamentals and the context that are still driving this stock higher. Cipher's 10-year hosting agreement with Fluidstack, backed by Google LLC, remains the centerpiece of the company's transformation. The deal, valued at over $3 billion, represents a massive step forward for Cipher, one that effectively redefines its business model. Rather than relying solely on the cyclical and volatile economics of Bitcoin mining, Cipher is now positioning itself as a key player in the global AI compute race. The company will be using its energy-efficient data centers to host high-performance computing workloads, the same type of infrastructure that powers machine learning, AI model training, and other computationally intensive tasks. The fact that this partnership involves Google-backed Fluidstack gives it extra credibility and market confidence. It signals that Cipher isn't just talking about diversification, it's actually executing it through long-term agreements with credible partners. Since that deal was announced, the market's perception of Cipher has shifted significantly. Analysts and traders are now starting to categorize the company as an AI infrastructure stock rather than just a Bitcoin miner. That reclassification has implications for how investors value the business, and that's one of the reasons we're seeing such persistent strength in the stock. Monday's move, therefore, may not have been driven by new headlines, but rather by continued accumulation and breakout momentum as more investors realize the magnitude of that transition. At the same time, Cipher's technical indicators have strengthened considerably. Over the past several sessions, the stock's composite rating, a metric that combines price strength, earnings trends, and institutional demand, has risen to 96, signaling that the stock is now among the top performers in its sector. That type of improvement doesn't happen by chance. It's often the result of sustained institutional accumulation, algorithmic trading models identifying strong momentum setups, and broader market recognition that a company is gaining traction. In other words, this 6% move might not be random. It could be the visible reflection of deeper capital flows building underneath the surface. That institutional story is important because it provides durability to a rally. Retail-driven moves can be sharp but short-lived, while institutional participation tends to create more sustainable, stepwise growth patterns. Cipher's improving liquidity and visibility make it a viable candidate for inclusion in more portfolios, especially as fund managers look for alternative plays that bridge the crypto and AI narratives. It's also worth noting that Cipher's fundamentals remain solidly supportive of this trend. The company continues to maintain one of the most efficient mining fleets in the world, with over 114,000 miners operating at a fleet efficiency of 16.8 joules per terahash and a total self-mining capacity of 23.6 exahash per second. In September, Cipher mined 251 Bitcoin, selling 158 and retaining nearly 1,500 Bitcoin in reserve. Its operations remain among the most energy-efficient and strategically located in the United States. These fundamentals serve as a backbone for its newer ventures in AI hosting, providing the financial and physical infrastructure needed to support that pivot. The combination of operational consistency and new strategic direction is exactly what markets reward during periods of uncertainty. At the same time, the AI narrative remains one of the strongest tailwinds across markets. Investors are eager to find companies with exposure to the AI infrastructure theme, but at reasonable valuations. Most large-cap AI names, like Nvidia and Supermicro, trade at rich multiples, making smaller players like Cipher Mining especially attractive to investors who want exposure to AI growth without the same level of valuation risk. Cipher's position is unique because it offers a tangible link between digital assets and digital intelligence, two of the defining technologies of the decade. It already has the land, the power access, and the cooling capabilities that are required to run AI data workloads efficiently. The only missing ingredient was a partner, and the Fluidstack deal filled that gap. That's why each time Cipher consolidates, it tends to attract fresh buying. Traders and investors view it as a strategic long-term story rather than a short-term speculation. Now, that doesn't mean there aren't risks. Insider selling earlier in the month reminded the market that not every executive is holding indefinitely, and the potential for dilution through warrant exercises remains a background concern. But these are normal growing pains for companies transitioning from one business model to another. The key question is whether the long-term fundamentals justify continued investor confidence, and so far, the market's answer appears to be yes. Technically, Monday's move also has an interesting setup. The stock broke back above near-term resistance levels that had formed after last week's pullback. Volume patterns suggested renewed participation, particularly late in the session, and the follow-through in the aftermarket indicates that traders were willing to carry risk into the next trading day. That's typically a bullish signal. The next major resistance zone sits around the $15 mark, while the nearest support is near $13.50. If CIFR can hold above the 14.5 area and continue to build volume into Tuesday's open, it could confirm a breakout continuation pattern. Momentum-wise, the stock is also riding a strong relative strength trend. Its RSI levels remain elevated but not yet overbought, suggesting that while there's enthusiasm, there's still room for upside continuation before technical exhaustion sets in. The overall market environment is also working in Cipher's favor. Broader equity markets have stabilized after several weeks of volatility, and risk appetite is improving as the Federal Reserve maintains a measured tone on future rate cuts. That kind of macro backdrop typically benefits growth-oriented and high-beta names like Cipher. Crypto markets, while still choppy, have shown renewed signs of life. Bitcoin has reclaimed key psychological levels, and Ethereum's volume has started to climb again. While Cipher is diversifying away from pure crypto dependence, there's still a strong correlation between Bitcoin sentiment and its share price. When Bitcoin moves up, Cipher often moves faster, and that correlation remains a quiet driver of confidence. So what can investors expect next? Heading into Tuesday's session, the key will be follow-through. If Cipher can sustain these gains and build on Monday's momentum, it will strengthen the case for another leg higher. Traders will be watching for confirmation in the form of higher volume and steady accumulation throughout the day. Beyond the technicals, the market will also be looking for updates. Any new client announcements tied to its AI hosting business, progress on its data center expansion, or clarity around potential institutional holdings could all serve as catalysts in the days ahead. Longer term, the company's story continues to align perfectly with macro trends. Demand for AI compute capacity continues to outstrip supply globally. Companies like Cipher that already have energy-efficient, scalable infrastructure are well positioned to capture a piece of that demand. Add in its operational leverage and geographic advantages, and you have a company that's structurally aligned with two of the most transformative industries of our time, crypto and artificial intelligence. So while Monday's 6% gain may not have been triggered by any breaking headline, it reflects something arguably more meaningful: confidence. Confidence that the story is intact, that the fundamentals are solid, and that Cipher's evolution into an AI infrastructure hybrid is not just hype, but execution. If momentum persists through Tuesday, it could signal the start of the next consolidation leg before a larger push upward. Investors will want to keep an eye on the $15 mark as a potential breakout zone, and if that level is breached with volume, the next test could be towards 16 or higher. The key takeaway here is that the narrative remains bullish, and the price action continues to confirm that optimism. Cipher Mining is no longer just a Bitcoin miner. It's a strategic player at the intersection of two major revolutions: decentralized finance and artificial intelligence. The market has noticed, institutions are taking note, and Monday's action shows that the rally has not yet lost its energy. As we move into Tuesday's pre-market session, the big question is whether this breakout will continue into next week, or if short-term profit-taking will momentarily cool things down before the next move higher. Either way, the long-term setup remains strong, the fundamentals remain sound, and the narrative continues to evolve in Cipher's favor. This is a stock that's finding its rhythm again, and for now, the trend looks set to continue.